Hey AWS family, this is Renee and Jay with this month's monthly update video.
So, after the first quarter of the year being down in the market, although our portfolios stayed above water, April actually was a big month in the market. So part of that is because the market is just generally ignoring the Iran war and everything to do with the Strait of Hormuz. The market actually is factoring in that this is going to be over very quickly. So from April 1 to May 1, the S&P 500 was actually up over 12%. Now, if the market is wrong and this conflict goes on and drags on for a longer period of time, then the market might react a little negatively. And so that's one of the main reasons that we have shifted slightly back to more of a neutral stance. If anything, we would probably be in a selling position rather than a purchasing position right now. Another reason for moving back towards neutral is typically that May through October is the worst time to be in the market every year. There's actually a saying in the industry that says, sell in May and go away. Now, we don't quite follow that, but we are going to be a little bit more neutral. There are several reasons for that whole philosophy. Wall Street, all of those people, for the summer, they head to the Hamptons, quite honestly, and they're in vacation mode. And so there's not a lot of buying and selling, not a lot of trading done, and it just tends to kind of throw a wet blanket on the market. It's just typically slow. However, the last couple of summers, that hasn't really been true. The market has been fairly strong the past couple of summers, but that's just another reason for us being neutral.
You've also probably have heard on the news, that foreign countries are just not buying U.S. debt. Jay and I have been talking about this for the past few months, that that's just not true, and we're continuing to see that. Back in February, $200 billion in U.S. debt was bought by foreign countries, with Canada buying the most. We're also still seeing inflation high. It's over 3%, so we really don't see any rate cuts for 2026. Corporate profits are still high, so corporations are still having good earnings. Consumer spending is still up. It's up 1.25%, so your consumers are still out buying goods and spending money. And unemployment rate actually started to come down a little bit, even though the hype of AI and potentially taking over corporate positions. Unemployment dropped to 4.6. So overall, still a pretty strong economy. That is all we have for this month's update. Stay tuned for next month's. Thanks.